John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hello, my name is John Ulzheimer. I am a consumer credit expert. I've spent time at both FICO, the credit scoring company, and Equifax, one of the generally recognized consumer credit reporting agencies. Today I'm going to compare and contrast two common methods of building credit, establishing credit, reestablishing credit, rebuilding credit. They kind of all mean the same thing in the grand scheme of things. And the two strategies that I'm going to discuss today are credit builder loans and being added as an authorized user on an existing credit card of another person. So let me explain how each of those work, and then we can talk about some of the comparisons. A credit builder loan is exactly what it sounds like. It is a loan issued generally by a credit union, normally for a very small amount. Most of the time it's less than $1,000, and it has to be paid back in less than a year. Yes, there are some exceptions to that, but that's generally how it works. The sole purpose of a credit builder loan is to establish some form of credit history by paying the loan on time. A loan is what's referred to as an installment account, which means that you're making the same payment every single month for a fixed number of payments. So think of a car loan or a mortgage. You're paying X dollars every month for Y months. And then after you get done doing that, then you've paid off the debt and you own the car or you own the house. So a credit builder loan is really no different, except there's no physical asset that is securing the loan amount. What the result of a credit builder loan is a fairly small dollar amount that you're borrowing, but that you don't actually take possession of the money when you take the loan out. The money actually stays with the lender and goes into an interest accruing account. So think of like a money market or a savings account at a bank or a credit union. So even though you're making a payment every single month and you're paying interest every single month, you are also earning interest, which helps to kind of subsidize essentially the cost of carrying the loan month over month and the interest that you're paying. And after 6 months or 9 months or 12 months, when you get done paying off the loan, you're going to have that many months of positive credit history reported by the lender, and they're going to release the funds, and then now you have the actual amount that you borrowed plus the small amount of interest that you earn. So it's a nice way to earn, maybe some mad cash or start to build an emergency fund or something of that nature. And at the same time, you've also benefited because now you have a positive trade line on your credit report. The authorized user strategy is a little bit different. You are having your name added to an account of another person, a credit card account, and you're authorized to use that credit card, meaning that you have purchasing power on the card, just like if you were the individual card or the primary card holder. However, you don't have any liability for the debt. So if for some reason the debt goes into default, then you're not the one who has to pay it back. The primary card holder has to pay it back. And the reason why a lot of people like the authorized user strategy, it's almost like a credit card with training wheels to some extent. You have a card, it's in your name, you can use it to charge stuff. I mean, at the end of the month, someone else has to pay the bill. So it's almost like best of both worlds, if you will. You get to use it, but you don't have to pay it. Obviously, someone has to pay it, or the loan or the credit card is going to go into default. That default is going to show up on your credit report, and it's not going to be very helpful at all. And in fact, it can be harmful to your credit score. But to the extent that you're added to an account that has well-aged, paid on time, never delinquent, low balance, high limit. Those are all things that if you had almost kind of paint yourself the picture of a perfect credit card, that would be the stuff that you'd want in the painting. So you really want to have your name associated with that type of an account. So let's compare the benefit of these two things on your credit score. In some respects, the authorized user strategy is actually better than the credit builder loan, and here's why. You can have your name associated with an account that is 5 years old, 10 years old, 20 years old, and when it's reported to your credit report, it's going to have that date opened associated with it. So you're going to immediately get the benefit of having a really old account on your credit report. If you open a credit builder loan, you're opening it now, which means the open date is going to also be now. And there's a metric in credit scoring systems that takes the average of all of your accounts. And obviously opening a brand new loan, even if it's for a very small dollar amount, it's mathematically guaranteed to lower the average age of your accounts. And so while you're getting a good account on your credit report, you're also getting a brand new account on your credit report. And while that's not the worst thing in the world that can happen, it certainly isn't the best thing in the world that can happen. So if you have a choice in the matter, you'd like to have your name associated with some form of an account that is very old, because then that'll make your average age of your accounts older rather than younger. And obviously that's going to be beneficial to your credit scores. The other issue with respect to authorized users versus credit builder loans is the issue that we already discussed, which is liability. If you go out and take out a credit builder loan, you're responsible for making the payment every single month. And again, these are very small dollar loans. And so the payments are also very, very small. Should be very easy for you to make that minimum payment every single month, even if you don't have a huge income. But in fact, you are liable. So ultimately, if the loan goes into default, you're the one who's holding the bag and has to make the payments, and those are the ones that negative credit reporting is going to happen, and any collection efforts would be against you, not somebody else. Versus the authorized user strategy, if the loan goes into default, you can have your name disassociated with it, meaning that you can cease being an authorized user, and you're also not going to have any collectors calling you because you have no liability. So if you think about those two things, if you kind of compare and contrast the two, the authorized user strategy actually gives you more upside as far as credit building and credit score improvement strategies. The credit builder loan, while it's perfectly fine, I'm not saying anything negative at all about credit builder loans, but there are some issues that you have to consider, and those primarily being liability and also the fact that the account is going to be brand new. So thank you very much for watching. If you have any questions or comments, leave them below. I'll do my best to get them. And I appreciate you taking the time to watch me today. Have a great rest of your day, and we'll talk again soon.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.